Hey everyone, College Investor back to another video for today. So what happened to the fintech stocks on Wednesday? Why did SoFi, Block, PayPal all drop over 4, 5, 6, even 7%? I mean, some of these stocks are back to the 2020 lows. PayPal is back to the 2017 lows. It was complete carnage on Wednesday. Of course, right now with everything that's going on around the world, stock market sometimes for some people is not that important, but the stock market is definitely taking a beating right now. Now, one positive thing is finally House Republicans have a new speaker that should get the people back to work, and hopefully they'll come out with some better fiscal policies. I mean, one can hope. But what has happened exactly on Wednesday specifically with regards to fintech stocks? We're going to have a look at that in a second. I'm also going to touch on PayPal, SoFi, and Block. They're yet to report earnings, should be at the beginning of November. So we're going to look at the expectations there. So what happened? Well, Worldline, which is a French payment company, they actually crashed over 60% or near 60% on Wednesday. So the group downgraded its sales outlook and said it was clamping down on fraud in the sector by cutting off some clients. Worldline cited a deteriorating economic backdrop, especially in Germany, its biggest market, with shoppers cutting spending as one of the reasons for cutting revenue forecasts for 2023. It now predicts growth of 6 to 7%. That's down from 8 to 10% previously. Now, of course, you might say, okay, this is just in Europe, just in Germany, specifically maybe just for this company. Because remember, Visa's outlook, they think that they don't see a recession happening. But that's Visa, a very, very good and well-positioned company. Worldline, maybe it's just specific to them. Maybe it can affect players like PayPal because Germany is a big market for PayPal in Europe. So those effects can be seen in other companies. Remains to be seen. Now, the chief executive said here, we face now more challenges than we anticipated, even until very recently. The first one is obviously the economic slowdown in Europe, most particularly Germany. Continues by saying here, we came out of the pandemic. It felt like all this consumer behavior would follow through in an explosion. To a certain extent, that stayed, but there's a normalization. The companies have not done a preemptive adjustment of managing expectations. They were trying to take ambitious targets and meet those targets. Now, here again, I like to put in a counter argument saying that maybe this company was not as well prepared as all the others. So maybe, yes, this is a slap in the face for Worldline, but all the other, let's say, American companies maybe already predicted this. And if you listen to all the earnings calls, the outlook for the fintech players in the United States, I mean, they've been talking about a slowdown for quite a while. And we've seen this in the numbers, and you see this in the stock's reaction as well. So again, maybe this is just a Worldline issue, and companies like PayPal have already taken action for this scenario. Remains to be seen. Of course, PayPal, new CEO coming in, he definitely has his work cut out for him. And then, of course, a company like SoFi doesn't really operate in Germany, so it shouldn't affect a company like that. But since it is operating in the fintech industry, it got dragged down as well. Now, if we look at all three companies, Block, PayPal, and SoFi, of course, with SoFi, we can only look at the metric price to sales ratio. The trend here is pretty clear, right? Right now, these metrics compared to its 5-year mean, all of these companies are well below that 5-year mean with regards to PE, EV to EBITDA, price to sales, and even price to free cash flow. I mean, PayPal right now trading at 9.7 times PE in the next 12 months. 5-year mean was 33.6 times. I mean, how much lower will these companies get before people or investors, big investors, small investors, start to see the big opportunity here? I don't have a crystal ball, but to be honest, sometimes these things just look way too attractive to ignore, just like with Netflix, just like with Tesla, with Nvidia, with Meta during those crashes back in late 2022, or with regards to Netflix, beginning of 2022. I don't know if this is the bottom or if we're near the bottom, it could get worse, but sometimes the valuation is just too attractive. The doomsday scenario just doesn't make any sense anymore. And risk reward wise, there is just way more reward than risk. Of course, we are still in a very, very difficult environment, still higher rates. In my opinion, rates will be cut, but we'll probably stay with the high rate environment for a longer period of time. Just by the way, the longer the rates remain high, the more the US will have to pay on their $33 trillion debt. So it hurts the United States more to have high rates than you and me that hold just stocks. Just putting it out there. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. Subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the month. So let's try and do a little push. And if you want to support me even further, do check out the link down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/gauchinvestor. Thank you very much. Now, with regards to the sales expectations and growth for EPS as well, for PayPal, for fiscal year 2023, the market is expecting close to 8% growth. For fiscal year 2024, reacceleration 8.9%, and then fiscal year 2025, 9.29%. If we look at EPS, more growth there. Of course, we've seen this trend play out before. Fiscal year 2023, 19.8% growth, then 1 year later, 14.32, and another year later, 22.6% growth. So of course, the bottom line here should increase much more than the top line, which could help with free cash flow, which will definitely help maybe buy back even more shares. As for the price targets right now, we can see that the average price target for PayPal, of course, that will change probably after they report earnings, but currently it sits at $83, so the difference here is 60%. Now, if we look at Block, previously Square, sales growth for fiscal year 2023 expected to be just under 23%, so quite nice. Fiscal year 2024, 12.8%, and then fiscal year 2025, 13.6%. If we look at EPS, for fiscal year 2023, huge growth there, close to 74%, then close to 40% in 2024, and then 27.9% in fiscal year 2025. Of course, these are just estimates right now. Remains to be seen if these can actually be achieved, especially with Block. I mean, they need to show that the business can be very, very profitable. And as for the average price target, currently it sits at $74, which represents a 74.3% upside according to the analyst. Of course, again, these are just analyst price target. They definitely change when the stock goes down or up on a bad and on a good earnings report. As for SoFi, the sales growth here is the best out of the three. So fiscal year 2023, 31% sales growth, 2024, 24.29%, and then fiscal year 2025, another 20.26%. With regards to EPS, of course, currently the expectations are still it not being profitable in fiscal year 2023. Same thing in 2024, close to break even, but then in 2025, 29 cents. As for the average price target, it sits just above $10, which represents a difference of 44.5%. Now, before I end this video, if we want to look at the graph, this is basically PayPal. We're back the same point we've been back in July 2017, so $51.20. Of course, previously the $60 mark was a small support line, didn't really hold in the last couple of weeks, but then everything can change with a good earnings report. Currently, we're still not oversold on the weekly. I mean, let's see. Currently, we're in no man's land here, but hey, with earnings reports, things can change very, very fast. As for Block, ticker symbol SQ, we're now back at the 2020 low, so the COVID levels there. Currently, we have been sitting around that price for a couple of weeks now. Maybe this is going to become a short-term support base. Remains to be seen. We're still not oversold. Pretty close though. And here again, earnings are coming up pretty fast. That can change the whole sentiment with regards to the company and the whole momentum with regards to the stock as well. Then with regards to SoFi, we're now back to prices not seen since, well, May 2023. So the stock here is performing much better than the rest. Of course, the business itself is growing also faster than the others, but still we are having some difficulties staying above that line, which I drew back here, above $7.58 or so. This one, same thing. We have earnings report coming up very fast. Of course, we're going to cover all of those on this channel. Same thing here. Things can change dramatically with regards to the stock. The company is definitely executing quite well. Management there is top class. But remains to be seen, can they show us already some signs of profitability? We know that Q4 should be that quarter, but maybe Q3 might surprise. That will definitely push the stock up. I mean, previously, they've always reported a beat and even a raise. Stock reacted positively, but a couple of weeks later, the stock drops again. That's just the story for fintech in 2023. But for long-term investors, in my personal opinion, I think these are the times where you can build up very, very nice positions that will reward you in the long term. I will also say that the fintech industry is due to some consolidation, meaning lots of M&As should happen in the coming quarters, maybe in the coming year or two. That's just my opinion. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.